Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of uranium, ticker symbol URA, the ETF that tracks uranium. I will also be going over Next Gen Energy, ticker symbol NXE, as well as Uranium Energy, ticker symbol UEC. And so I just wanted to do a follow-up on these from last week's video just to give a little bit of an update on the current price action. And so this here right now, looking at the big picture on the weekly time frame, we can see this giant cup and handle that was formed, breakout occurring in around August of 2023. And it does look like we have broken above the top of this cup and handle, right around a price of $28. And it is quite possible we will pull back and retest that. But I do want to, just zoom in on what happened over the past week so we can get a better idea of what we're looking at. And so here, this is the chart on the daily time frame. And so last week, I believe the 17th is when the video came out. So we saw this little bit of a kind of an indecisive candle or doji there with a big wick and tail of the candle there. Got a couple hammers after it. And then on the 22nd, which would be Monday, big red candle going down nearly 3% on the day, followed by nearly 2% up on the 23rd, so just yesterday. And then today, January 24th, Wednesday, another down day, coming down about 1% on the day. And so, a couple things that stand out to me is one is this gap fill based on the high of January 11th. And so coming down to fill that will be coming down to a price of right around $29.39. Also, as I had mentioned, this level at right around $28. But what I do see is, basically we saw this bounce on Monday. And so I am kind of under the impression that what we're seeing is bullish consolidation. We're seeing, this downtrending consolidation, and that we might be getting a breakout soon because we do see what looks like a bull flag here. And so I'm very curious to see if this gap does get filled. I do think that there might be a tail of a candle or wick that comes down to fill that. But I'm starting to lean against the possibility of retracing down to right around $28. That seems less likely to me. And one thing that I feel like might be useful as far as guidance over the next week is just doing a Fibonacci retracement from the low over here on January 3rd up to the high on January 16th. And so this is an approximate retracement, but what we can see is the 50% level is right around where this gap fill would be, right around $29.30. And it does look like we did get a test, but a bounce above the 382 level, which is at a price of right around $30. We did close above that today at $30.01. So I do feel like there's a lot of strength being shown, and I am skeptical of the likelihood of returning to 28. I do think this could continue higher, following possibly a bounce down to $29.30, something around there. But that could break, and then we could be coming down to the 618, which would be right around $28.68, or $28. Right around there. That does coincide with the 786 retracement, which is at a price of $27.77. So right around where I drew that orange line. So, that is quite possible, but I do think that it has been showing some strength over the past week. And so I could see this level not be returned to. And then so just to kind of relate this information to the other tickers, so looking at Next Gen Energy, we do have the gap down here that would be going to a price of right around $7.13. We did get a close on the day of $7.41. Similar to URA getting a bounce here. So I'm kind of skeptical that we're going to see even a fill of this gap. because this consolidation does look to be quite bullish. This downtrending consolidation likely to break to the upside. But, again, we could be returning to this orange line at $6.56. So good to prepare for that if it does happen. And if I do another Fibonacci retrace, the levels are a little bit different over here, but it does look like the gap lines up with one of the levels, not the 50%, but the 618, right around $7.12. And the 786 would be returning to a price of right around $6.85. So those are a couple levels to keep in mind. Quite possible NXE will be returning to them, if not a full retrace, which would be basically coming down to this orange line at $6.56. And then similarly, looking at UEC, we do have the gap that's pretty far down relative to the other two. We did get a bounce around here. And so, with this gap fill right around $7, precisely at, $6.93 here. And that was not only the high of the day, but I believe that was also the close. Yeah, $6.93. That would be a proper gap fill there. So it is quite possible we return to those levels, or $6.60, the orange line. And if I do another one of those Fibonacci retracements from the low over here up to the top, that would put the orange level at the 786 retracement. So still, all of these are fairly different. Because looking at NXE, the 786 is well above that orange line. URA, the 786, is actually at that orange line. So actually, URA and UEC are similar in that sense. However, the gap here, let's see, is right around the 618, right around $7. URA, the gap is at 50%. But with NXE, we do see that gap at the 618, 50%. Looks like it had just served as support. Anyways, back to UEC. It does look like the 382, right around $7.50, acted as support here. So it is quite possible we do retrace down to the 50% level, which is at $7.24. But, again, like the other two, it does look like we're seeing, this bullish consolidation, downtrending consolidation, a bull flag. And so I could definitely see that breaking to the upside, not only with UEC, but also NXE and URA. All are pretty compelling bullish consolidation. So I do think we will see some strength and moves higher. But again, always prepare for the worst and these levels to the downside. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.